Good morning and welcome to the Artisanal Spirits Company PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Andrew Dane, CEO. Good morning to you, sir.
Good morning. Thanks very much all for joining. So I'm Andrew Dane. I'm the Chief Executive of Artisanal Spirits Company and joined here by Billy McCarter, CFO. So I look forward to talking about Artisanal Spirits Company, which creates and sells outstanding limited edition whiskies around the world. And we're here to talk about performance in the first 6 months of the year. Now, we predominantly do that through the Scotch Malt Whisky Society, which is a global direct-to-consumer premium business selling outstanding limited edition whisky, primarily online and exclusively to a worldwide membership. Now, how do we do that? Well, we're not a distillery, so we procure from a wide range of distilleries, having now bottled from over 150 different distilleries to date. We mature those, owning 17,000 casks today, creating almost 1,000 new products last year alone. And we bottle those under our own brand. And we sell them, as I say, exclusively to members, but we're about more than just a bottle shop for wonderful whiskies. We're about the events, the experiences that go with them. And we have 4 wonderful member rooms, one of which I'm in here today in Queen Street in Edinburgh, as well as the spiritual home of the society in the Vaults in Leith, which we'll talk about later on, one in Glasgow and one in London. So we think about what's happened in the business. It all sits around our strategic framework. At heart, our purpose is to captivate a global community of whisky adventurers, people who are on a flavoured journey. And we do that by revealing really the magic of our unique and outstanding whiskies to them. Our ambition is to create high quality, highly profitable and cash generative premium global spirits business. And we're on track for our short-term ambition of doubling sales by next year. And we do that by delivering the world's best whisky experiences. Now, when we look at what we've done in the first 6 months, there's both been strategic progress and financial and operational progress. So I'm going to talk a little bit about strategic progress first, and then hand across to Billy to talk around that financial and operational performance too. From a strategic performance perspective, what we've been working on fits under our strategic pillars around membership proposition, experience, liquid, reach, and people. And we set ourselves a number of ambitious targets for this year. And during the course of the presentation, we'll talk about a few of those at various points. And I just wanted to show you how they fit. And really that includes things like the expansion in Asia, with the launch of a new franchise in Korea in April and the addition of the Taiwan subsidiary in August, the launch of a new membership and a bottled product, which we'll talk about, which will be on sale in the UK ahead of Christmas time, the refurbishment of those wonderful venue at the Vaults, as well as a launch of an app and website, moving all of our supply chain operations into our new facility at Masterton Bond, which started operations last year with CASK warehousing, bottling, and then the final part of operations, order fulfillment, moved across in May of this year. So that's now fully operational, as well as delivery on key strategic objectives like cask sales, which we'll spend quite a lot of time today talking about. And alongside that, still looking at long-term opportunities with the business, with our first shipment into the US for J.G. Thomson arriving ahead of sales hopefully in the second half of the year, and continued development around opportunities in America. And underpinning all of that are our people, with some big changes with appointment of Billy as CFO, with Chris Leggett joining as Business Development Director, and promotion of Rebecca Hamilton to Marketing and Experience Director, bringing all of the elements of experience, both physical and digital, all into one place. So as I say, we'll come back to those in detail, but just want to set out some of that strategic context. But now hand across to Billy. We'll talk a little bit about financial and operational delivery.
Thank you, Andrew. Good morning, everyone. On the screen currently, you can see our key KPIs for the business, and it splits into 3 columns. It's a growth, membership, cask spirit. We performed well in the first half. We've grown revenue over 3%, And one of the key points around that is following a relatively flat Q1, we delivered 7% delivery in Q2 to reach that to 3%. And that flat Q1 was really driven by the headwinds within China. That was predominantly having come out of much longer and significant lockdown. There were more cases of actual COVID in the country. So we're pleased with the momentum we've gained in half two, and as a result, we therefore remain on track to deliver the balance of the year in half two, which is much more weighted in the second half for the full year. And as a result of that performance, we stay with a really positive £6.2 million gross profit on that £10.2 million revenue. The core of our business, what makes us successful, are our members. Our membership is up 9% on the same half in the prior year, which is fantastic, at almost 39,000, and at the time of speaking we are at over 39,000, which is fantastic. We still have a really strong top level retention. So as a reminder, that's above pre-COVID levels. It's slightly down last year, but 74% is still very strong and above that pre-COVID level of around 69-70%. And our lifetime value, as a KPI within the business, we like to maintain a directional view of. We're still very strong. It's still up 35% since IPO, a little down due to that first half and flat performance, particularly in Q1. And as a reminder, as a business, we have a strong balance sheet, heavily driven by the investment we've made in CASK. So at the minute, from top to bottom on the right-hand side, we have a net book value of CASK Spirit at £24 million. That's what we've paid for the spirit that sits on our books, and quite rightly we have to hold it on our books at that. Every year we do an annual review, an annual valuation via RBS as part of a revolving credit facility with an external party. They valued those CASK at £38 million. So as a minimum, the value of those CASK are £38 million, but they're recognised in our books at £24 million. That's up around £10 million year on year. And as a guide, notional retail value, if we take every litre of spirit out of those casks, bottle and sell it as part of a business model, we're still looking at around half a billion pound of revenue delivered from that. So that's really fantastic strength behind our business. And as I go on to talk a little bit more about revenue, the key theme here is our growing and diversified global revenue. More diversified this year for a couple of reasons. We've done more in the way of CASK sales, and Andrew will talk a bit more about that shortly as a strategic objective. We've delivered £500,000 in a year, and that really helped offset some of that slow start in China as we delivered year-on-year growth. We were not overly exposed in one market, which is a really good place to be. What I'd also like to call out in revenue is some fantastic performance within our UK venues, strongest 6-month performance on record, and in Europe, over 20% growth also. In line with our strategy, we're always going to continue to enhance the value of our CASK stock and take advantage. So back to the first point, Andrew will talk a bit more about that. But as a business, we have some key strategic opportunities around those CASK sales, which we'll definitely look to deliver in the second half as well as we achieve our full year ambition. So moving on to our profit position, as you can see, the 10.2 flows through. We have made an adjusted EBITDA loss of 1.8 million in the first half. That's very much driven by the balance of delivery of that revenue growth in the financial year. So for example, China did have a slow start, but it also has comparison of against last year, it was 60% up in the prior year. So that was a really strong first half last year, a slower start to Q1 this year, but delivery in H2 in China will help us maintain our ambition of achieving consensus levels around £25 million of revenue and an EBITDA of £1 million. In terms of the rest of the P&L, you can see that our marketing cost base is a little higher in the first half. That's purely balance of revenue delivery against that marketing spend. That's been a more challenging first half, so we put more into it. It's evident and clear that our delivery in the second half is much more delivered around the October, November, December period and the opportunity around CASK sales. Within payroll and other overheads, there's no specific risks in there. What I'd call out is inflationary environmental pay increases as an average. We gave 78% pay increase last year. And other than that, Masterton Bond last half year was phasing up. We weren't fully manned, but in the second half was fully manned. So therefore that comparison will kind of dip back a bit in the second half. In terms of overheads, that's the continued investment in what we call a technology roadmap as we look to deliver, for example, an app by the end of the calendar year. So those are the key investments we've made. But in terms of our balance sheet and cash flow, I mentioned at the start the power of our balance sheet in terms of our CASK spirit. We have a net asset value of £18.7 million, driven by that £24 million of CASK spirit, which I've said before is the minimum level we would expect year on year, the bank valuation going up £10 million. So we're in a strong position there. I think it's also key to point out that from a cash flow perspective, our investment in CASK spirit is peaking. As a business since IPO, we've invested strongly in our CASK spirit, and the numbers we've mentioned justify that investment. But now as we get to a stage where we've got all the spirit we need until around 2029 and around 75% way into the beginning of the next decade, we will start to simply replenish what we have. That CASK spirit investment has peaked, will slow off as we start to drive profit and drive cash generation, replenishing that CASK spirit level. Most notably, leaving our net debt roughly where it is, around the £20 million mark in the near to medium term, and then paying that off as we see our EBITDA delivery further increasing. But the key thing for us is the operating cash flow is essentially the impact of the first half EBITDA. But in the second half, where we fully expect to deliver the full year performance, that cash flow should become marginally positive for the full year, which is completely in line with our strategic plan.
Thanks very much, Billy. So we talk about the strengths of the business across the three of the pioneering model, the long-term global growth opportunity, and a robust business primed to deliver. And what I'll do is I'll bring that to life a little bit and talk about the pioneering model of the Scotch Malt Whisky Society. And within that, at its heart, is this loyal, valuable, and growing global membership. And as Billy said, it's now above 39,000, kind of proving that the underlying core proposition continues to resonate, continues to gather momentum. Now, when we look at lifetime value, it is slightly down year on year, primarily reflecting that marginal drop in retention. But it is worth noting that this is not a directional KPI. This is not about that number needs to be driven up over time. It reflects the fact that it's a combination of loyal, engaged members combining with the high margin model means that there is a significant profitability associated with every member. And that reflects the fact that they continue to be engaged in the proposition that we're delivering. And as Billy said, that's 35% higher than it was at the time of the IPO just a few years ago. And one of the reasons that the proposition continues to land is that we truly deliver a hybrid model with both digital and physical interaction. Now, how that comes to life varies by key market, but I'm going to talk about the four biggest regions for us and explain how that really comes to play. First of all, in the UK, most obviously are the four member rooms that I referred to. Queen Street here, the image there is an artist's rendition of what the refurbishment will look like. It's going to be open next week, and I would strongly encourage everyone to come and see it. We were seeing the bar being installed yesterday. It looks absolutely wonderful, and I think it's going to be a great home for the society well into the future. And we've learned the lessons and listened to members about the things they really love about coming to the members' rooms. For example, being able to talk to really highly knowledgeable teams, so a much bigger bar area, easier interaction. But also things like the seating arrangements so that you can sit with your friends and the friends that you haven't met yet. So it's going to be a great relaunch next weekend. Alongside that physical experience in the UK, we're also launching an app in the UK in the coming weeks. And that will allow us to deliver better engagement online, because we know that most members in the UK already spend primarily engaged in the website through their mobile, so making that journey easier, and then adding additional functionality in due course. Similarly, in the US, it's another key market for us. Membership is growing strongly there, 15% growth in membership. And again, it's about that combination of physical and digital experience. From a physical perspective, being at a couple of the great partner bars that we have there, since we can't own our own venues in the US. Jack Rose in Washington, Brandy Library in New York, seeing the society come to life with existing members, but also as a recruitment tool for new members. And in parallel, we recently relaunched the US website, making that new member journey much easier, guiding people into the society and making sure they get liquid to lips as soon as possible. In Europe, We have a network of 66 partner bars that really bring the society to life across Europe. And those, together with increased footfall, increased presence at festivals, means that Europe is our fastest growth membership region this year, with new member recruitment up by 30% year on year in Europe. So really delighted with the way that that's been going. And finally, in China, it's the same feature. And after a flat start to the year, it's been nice to see momentum improving. And in fact, August was our joint highest ever month of recruitment in China, with about 3/4 of that coming from the WHISKY Festival, which is the biggest whisky festival in China. About 30,000 consumers attended the WHISKY Festival over a 4-day period. A few thousand of them came to the Scotch Malt Whisky Society stand, and we recruited around about 120 people during that 4-day period, helping to drive up membership in the second half of the year. But again, we supported that with a digital element, with a campaign on TikTok of short, easily consumable knowledge videos about what is whisky, how is it made, but delivered through the society lens, and using that as an education tool, but also a recruitment tool, recruiting 20-something members in that month, which might not sound like a big number, but remembering that lifetime value of a member in China is around about £3,000. So that's £60,000 of member lifetime value delivered through one channel, in one market, in one platform, in 1 month. So that shows how both the physical and digital really come to life in society. We talked a lot about bringing more people into the society and recruiting them. And this, I'm pleased to say, will be launching in just the coming weeks as well, a new membership and a bottle product, which will launch in time for Christmas. And that means that when new members are joining, they get a real wow experience and welcome to the society, but also making it easier for them to understand how the whole proposition, including, really important, the hero of the liquid in there, combining with the community feel. We've also been working a lot in the first half of the year on other ways to bring to life the wonderful liquid that we have, and taking advantage of the fact that the society turns 40 this year to release a wonderful 40-year-old product. And I've had the pleasure of tasting it, and I can say it's absolutely sensational. And that will be released for sale in October. The UK price of around about £3,000, exact price varying by market. And as Billy referred to earlier, the kind of balance of profitability in the year, if you look at all of those initiatives, all of the spend and investment has been in the first half of the year as planned, but the delivery and the upside starts to come through in the second half, giving us even more confidence in the second half of the year's delivery. And all of those strategic objectives fit within this context of a significant and growing addressable market. Worldwide, over $8 billion of Scotch whisky was sold in the ultra-premium price points in which we play. And pleasingly, 80% of that was in the markets that we already have a presence in. I mean, our addressable market is over $6 billion, and we represent a tiny fraction of that. And that market is growing, continuing to be driven by the premiumization trend as people drive towards authenticity, status, knowledge, experiences, provenance, all of the things that lend themselves well to what the society has been doing brilliantly for 40 years. Finally, we really are a robust business and really well positioned to take advantage. Now, one of the topics I want to spend a little bit of time on is talking about casks. We talked a lot at the time of the IPO about how we were going to go and invest. And it's worth reminding ourselves that we raised £15 million of primary proceeds 2 years ago, and that 80% of that has been invested into assets. Liquid, cask wood, Masterton bond. So we've invested in those assets, using that instead of paying down debt, because it drives long-term value. And I want to pick 2 subsets of that spirit investment here to talk about. First of all, around about £3 million spent on old, rare, fairy dust opportunities to really delight consumers, members around the world. A small number of casks, but an opportunity to turn that into liquid, put it in a glass, put it in a bottle in front of somebody very quickly. And that generates very significant returns, as you can see from the sales that we've already made, selling those for a multiple of the bank valuation. but also driving long-term value, because some of those are going into bottles now as wonderful 30-year-old product, but some of those are going to be the society's future 40-year-olds in due course. What we've also been doing is long-term value generation, investing in young and new make spirit. £3.5 million invested post-IPO, roughly 3,500 casks. That delivered long-term value. You can see the value of that has gone up by 26% in just the months and year or two since the IPO. So that is delivering, but we have to be patient to wait for that to come through into our balance sheet and P&L. But as Bailey referenced, the bank's valuation has gone up by £10 million this year. That's £10 million of value, which is accrued to the company, but isn't in a balance sheet or a P&L anywhere, because we have to patiently wait for that to come through. And we always knew that cask sales was an opportunity we wanted to pursue, but we wanted to think about how best to approach that. We've always had opportunities. People approach us all the time asking us to buy casks, but we needed to find a way to deliver it which was true to the society and Artisanal Spirits Company and what we wanted to do. We don't want to go near anything that feels like a cask investment scheme, speculative cask investments. Instead, we want to be selling to people who really want the whiskey. And we've made good progress in a few bits there. Building on a history of always selling casks into the industry, to trusted industry partners, which is something we've always done and continue to do. Obviously, that grows as the business grows, as the number of casks grows. Billy talked about the opportunities to rebalance our stock. Sometimes that's selling something here to buy over there. Sometimes it's an explicit swap, but something we've always done and continues to grow. And then layering on top of that, private cask sales, as we call them. Now here it's important to note what we are selling is a whole cask's worth of bottles. So this isn't about selling the cask that someone can then sell on. We are selling bottles. And we've had good progress in the months that this program has been live, some really good sales to individuals, primarily in Southeast Asia, but across the wider piece. And this is an opportunity to people to get a really personalised experience with some wonderful liquid. And we're in the really fortunate position of having invested in our spirit stock, that we get to do this as well as releasing equivalent products to our members, so nobody misses out. And then while these bottles are, or these casks are tens of thousands or hundreds of thousands of pounds per cask, we're also looking at ways that we hope to talk about in the coming weeks of making that available to a much broader membership base, have a private cask sales program where the casks are in the thousands of pounds. I look forward to telling people more about that in the coming weeks. So when we talk about cask sales, hopefully that helps bring it to life. Finally, people who really deliver. And as I said, significant changes to the executive team here and wider business, and continue to build on the culture, continuing to deliver from a really passionate, engaged team who love whiskey, love what we're doing, and love spending time with our members. And that's what makes the business sustainable as we look into the future. So if we think, what does that mean for where we are now and what to expect in the future? We remain on track now to deliver our ambition to double sales by next year and our path to profitability, including inaugural positive EBITDA this year. Now, what's happened post-period end? Continued growth in membership, underpinning the quality of the proposition. It's now above 39,000. Launch of that newly established subsidiary in Taiwan, one of the world's biggest ultra-premium Scotch whisky markets, and a great opportunity for us. And therefore, as we look ahead to what we expect in the balance of the year, real acceleration in revenue growth, with the positive impact of that Taiwan and Korea launches, improved momentum and weaker comparatives in China, timings of shipments as we deliver this year to support next year's growth, and further progress on those cask sales that I've just talked about. And that will support what has already been a wonderful start to the year in places like UK venues, even better with the launch of that brilliant refurbishment of the vaults, as well as continued performance in Europe. And supported by the delivery of those strategic objectives, the new app, the new membership in a bottle, new prestige product range, as well as some other treats that we have to reveal to members over the coming weeks. That gives us confidence in our ability to deliver significant growth in the second half of the year, deliver to consensus targets, including that inaugural positive EBITDA. Longer term, I mean, it would be stupid of us to ignore those wider macroeconomic conditions we see, but our increasingly globally diversified footprint, as well as our diversified business model, the growing membership, a pioneering model, high margins, combined with the demographics of our loyal and engaged membership, together with that continued premiumization trend, positions us well to continue to grow and deliver on that ambition and clear path to profitability in the long term. So that brings us to the end of the formal part of the presentation. I'll now hand back and we can go through some of the questions.
Perfect. Andrew, Billy, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Andrew, Billy, as you can see, received a number of questions throughout today's presentation. If I could just ask you to read out those questions and give responses where it is appropriate to do so, I'll pick up from you at the end.
Yep, no problem at all. So the first one is, the question is, does the vaults in Leith venue turn a profit? How does each income avenue, such as events, bottle sales and bar sales, contribute to the overall figure? So I'll hand across to Billy to talk about that.
Thank you, Andrew. Firstly, yes, the vaults and all our venues do make a profit. And the investment in the refurbishment of the vaults, which opens next weekend, will hopefully extend that opportunity as we welcome more and more members into the updated and refurbished spiritual home. In terms of the split, what you'll find is 60% of the income comes from whisky sales, and then the remainder is really split over memberships, food, tasting tickets, and items like that. What I would say is it's worth remembering on membership, that is a lower value. We only recognise the membership from a venue on the initial purchase, so any retention, any renewal doesn't as such sit within the venue, because as a business, our system currently can't compete with that, but that's just a decision that we've currently taken. But in short, yes, our venues make a profit, they do very well, and we expect that to continue. And as you've seen in the presentation, they've had a great 6 months here, a fantastic last 6 months to 12 months last year as well. So the rebound from COVID has been fantastic, and it goes from strength to strength.
Yeah, so that helps. Thank you. So the next question is about seemingly high level of senior executive turnover in the last year, and then a question about options. So let me talk to that. So I joined the business 3 years ago as finance director and was promoted to chief exec in January. With David having left, having been here for 6 years and delivered substantial growth in the business, including delivering of all the targets post IPO. And obviously one of the things I wanted to make sure is that we have the right team around us to deliver for the next stage of growth of the business. And I'm delighted with those changes, with the, as I say, the addition of Billy McCarter here as CFO, promotion of Rebecca Hamilton to marketing experience director. She's been here with us a number of years. And then real quality additions like Chris Leggett, who joined us, former chief exec of Douglas Lang, joining us as business development director, supporting some of the more established members of the team, like Kai Ivolo, who's our spirits director, been with the business for 20 years and is a key part of the current, historical and future success of the business. There's then a specific follow-up question you ask about outstanding options. Do they disproportionately belong to former employees? Certainly there are a number with former employees, obviously, as you would expect. The growing business, options have been part of that, but there is a balance between legacy employees as well as an ongoing programme of share option awards to existing staff, so they get to be part of delivering and being rewarded for the future success of the business too. So that helps. Next question was around, with a growing interest in whisky and a growing volume of new make spirit, could there be implications for whisky pricing in the medium term? How do you quantify and navigate this issue, including perhaps a question about whether or not there's been too much being laid down? So yeah, there's certainly continued growing interest in whisky, but particularly in the premiumization space. So whisky is being driven by value more than it is being driven by volume. And certainly the growing volume of new distilleries, people taking a new approach to whisky is great for the society. Our members crave variety, and it's wonderful to be able to bring them new releases from new distilleries, only the ones that we think are really, really great at delivering wonderful liquid. But our members love that. So that variety gives us lots of opportunities and potential and lays itself well to us. Overall, it's always hard to tell where the direction is going from a volume perspective, but certainly with positive news around expected direction of travel with regards to India and tariffs there, I think there is potentially a huge additional demand coming, even if the tariffs only move from 150% to 100%, which seems to be the thinking. That could have a material impact on the volume of good. What it does mean is in the short term, because we have good stock coverage, we can choose where to invest. And what you saw in when I talked about where we're making a cask investment is we've sort of spread into the two ends of the space, taking advantage of wonderful fairy dust opportunities to buy old and rare casks from outstanding distilleries and release those wonderful liquids relatively quickly, but also at the other end of the scale, working with a wide range of distilleries, a huge range of those, to buy new make and young spirit that we can grow and develop and deliver over time. Hope that helps. Next question was the reason for the change in model from a franchise to a joint venture in Taiwan. So here it's maybe useful just pausing and talking about the structure of the business. We use franchises across the world, and we've got about 12 franchises for a variety of reasons, but most importantly, they're a good way to seed new markets. Low cost, low risk way to enter new markets. And quite often the way we will do that is we will work with the partner bar owner in a successful market. For example, partner bar owners in South Africa and Mexico recently took on the franchises in those two markets and helped to grow them. By contrast, in Korea, we actually went through a beauty parade, identified a wonderful partner there, FJ Korea, who's done a great job, 300 members in 90 minutes in the Korean market. So franchise is a way of seeding new markets. So that's why we initially had a franchise in Taiwan. However, we recognized an opportunity to change because the route to market in Taiwan was different to every other market. Taiwan has quite strict laws around D2C alcohol e-commerce, i.e. that you can't do it because of age verification requirements. So historically, it's the only market in the world where we didn't operate a full membership model, bottles being available for sale in high-end specialist whisky retailers and bars. And that had never quite felt right, but was an easy way in the market back in the past. Instead, we've changed the route to market in Taiwan with what we're calling e-commerce light, where members will get an email about new releases, be able to go to the website and browse the product, but instead of clicking buy now, they click express my interest. That allows the process to then go through the fully legally compliant age verification process and the person can collect their product. So we took the chance with the change in that route to market to also bring that in to being a joint venture or a subsidiary, really, to take more control and take more of that opportunity ourselves. The next question is, are you finding it easy to pass on inflation and cask investment costs to clients? It's a good question, but it's not actually the way we think about it. We have this enormous inflation hedge because we already own all of the spirit that we're going to sell for the next 5 or 6 years and most of what we're going to sell for the next decade. So while there have been some price increases, particularly the old and rare, reflecting market conditions as well as some of the pricing in that space, it means we haven't moved pricing at all at the bottom end of the range. So an entry-level product, there was no price change last year because we wanted to make sure it's still accessible at the bottom end. Next question is, what is the annual subscription rate for members joining SMWS and what trends are you seeing in terms of year-on-year growth? So in the UK, the annual subscription rate is £85. In the US, it's $99. It's an equivalent rate in all markets. What I would say though is that most members join together with a bottle, and that new membership in a bottle pack I just showed you is £129, and that includes the bottle. So still great margin, but allow someone to get a bottle in hand. And that's actually something we'd like to see more and more of, is making sure that people get liquid to lips and really get to understand and experience the joy of a society whisky as early as possible, because we know it drives engagement, retention, and enjoyment of being a member. In terms of year-on-year growth, as Billy referenced, up 9% year-on-year, with broadly consistent growth between the second half of last year, first half of this year, and we've continued to see growth into the second half of 2023. Next question is, when will the app be ready for use by customers, and what kind of features can one expect? So the app will be launched this year in the UK first, initially only. Initially, it will be web shop functionality only, primarily. So it will have a few other little bits, but primarily it will be a web shop functionality. We can look at other developments in due course, but also where we are looking at different things like the ability for people to create private ratings for their own whisky. I'd like to see that being both in the app and the web, to make sure that everyone gets to use the functions that people are looking to have. So this year, we'll launch the app, but primarily about shop functionality, with additional functionality built in due course thereafter. The next question is, the share price has not been mentioned and has not performed well. What does the company and what do analysts predict for the share price going forward? So the first thing is that our primary role in the share price is to make sure we're delivering on results. We set out an ambitious path to double sales by 2024, and we're on track to do that. And we've invested in the people, platform, systems for a business of that size, and we're on track to deliver that. It's fair to say that the share price hasn't performed well, but I would say if you look at it relative to other IPOs of the year, the AIM All Share Index, since the time of IPO, you can see that our shares are broadly tracking in line with those. Certainly, we want it to be better, and I think given that we have continued to deliver, we are one of only two companies since 2020, in the 2021 IPO cohort, who hasn't had a downgrade in their forecast. But some of those companies have subsequently really struggled. So certainly share price is something I'd like to see improve, but the bit we are focused on is deliver on what we said we were going to do. Strategic progress, financial and operational performance, to make sure we've got the right long-term growth opportunity, but getting to profitability, cash generation, as we promised.
Perfect. Andrew, Billy, thank you very much for that. I think you actually covered off all those questions from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Andrew, could I just ask you for a few closing comments?
Yeah, thank you, Mark. And thanks. It's really important to us to get the chance to present, but also to hear the questions and the things that people are interested in. So thanks very much. Thanks for engagement. And as I say, leave you with the feeling that we really are in a position where we've invested in the people and platform systems. We've invested in strategic priority areas. We're very close to delivering a good number. We've already delivered some of those earlier this year. And therefore, we're starting to reap the benefits of all of that hard work of all of the team here, all of the investment we've made. And that leaves us here feeling confident in delivering on what we said we would do: full year results, inaugural EBITDA, and continued growth thereafter. Thanks very much.
Andrew, Billy, thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of the Artisanal Spirits Company PLC, we'd like to thank you for attending today's presentation, and good morning to you all.